What's up, guys? This is going to be a financial overview over O, which is Realty Income Corp. They're a REIT, which is a real estate investment trust. So they basically have a large portfolio of different real estate investments that they're publicly traded on the stock market. They have to distribute 80%, at least 80% of their earnings. It's basically a way for you to have a diverse portfolio in real estate without putting down hundreds of thousands of dollars for a single property. It's pretty cool. I like them a lot. I'll go ahead and show you Realty Investment Trust, but first I wanted to show you my portfolios and I'll tell you about the strategy of each. So this is my M1 Finance portfolio. It is a US-based brokerage account only. I have it broken down into sector here. I'll share this pie with you guys so you can see everything that's in it. I do have Realty Income Corp right here. It's a little overpriced right now, I think, and I'll show you guys why. But this is my long-term strategy. I think the company's gonna do well still. I still think that it'll go up in price. It is still gonna pay me dividends, so I will go ahead and buy it with this portfolio and hold it for the long term. That's the main goal of this portfolio, after all, is buy and hold for the long term, and you know, it'll eventually, hopefully, I can retire off of it and retire off the dividend cash flow. But as you can tell, the primary strategy here is just high dividends. The overall dividend yield on this portfolio is about 4%, I believe. Yep, it's almost 4%, which is right where I want it to be. Anything above 5%, I would say, is a little too risky. I do have a small expense ratio because I do have a funds and so these funds are just exchange traded funds that are on the stock market. They pretty much follow the S&P 500. Some of them are a little bit more risky, which I have down here, but they have a really high yield. And I also have some ETF bonds that track the bond market, so I can have a little bit of cushion if the market does go down quite a bit if we have a recession here in the next couple of years. Dividends 3% on this. So that's my strategy with M1 Finance. My strategy with Robinhood here is to put about 50% in those same ETFs that I had in M1 Finance. So SPY-D, Noble, so that's the S&P 500 aristocrats. They raise their dividends every year for the past 50 years. So very stable companies. SPHD, these are all high dividend paying ETFs that track pretty much the whole stock market. And then the other 50% of the capital I use in this is I actually kind of swing trade stocks, if you will. I buy when they're low and sell when they're high. Because I do like to play a bit of an active role in my investments. I don't just want to sit back and watch it, do its thing. I'd rather have somewhat of an active role and try and do my best with buying low, selling high. And I'll tell you guys some of the indicators that I use, and I've been fairly successful with it. I got 7% of all time. And before this, guys, I did not have $4,000 in here. I only had a couple thousand. So having 7% on 4,000 is great. I only had about 1,500 in here for quite a while. So I gained quite a bit more if I had not deposited a lot more money in this. So I'll go ahead and show you guys the financial overview of O and why I have not bought it yet, but it is on my watch list. All right, so we'll go over to Seeking Alpha. It's a free stock chart website, basically. It has all the financial information you'll ever need. So the first graph I look at, I am a dividend investor. I will only buy dividend stocks. Some people will say, oh, you're missing out on growth stocks, but what I've seen is that if a company can pay a dividend, then they're fairly stable. They have an adequate amount of cash flow. There's no real need to worry if they have a dividend. So that's the first thing, right, is dividends. So it has to have a dividend for me to buy it. So we'll look at the dividend growth chart first, and it's okay if this chart is not as steep as this, if they don't increase their dividends quite this much, or if it's kind of stagnant for a couple years in a row. See, after 2008, they remained stagnant, but it did not go down. That's key. It did remain stable, but it did not go down. So that is key information. If this graph is going down at all, I would hesitate to buy this at any time, even if you're going to buy it and sell it. I would highly hesitate to buy this if the dividend growth is going down. So since this dividend growth is going up, right, the dividend yield should be going up. So we'll look at the dividend yield. Oh, and it's not going up. It's actually going down. So the dividend yield is the percentage of dividend per share price. It's basically just a dividend divided by the share price and then set to a percentage. And as you can see, it's actually below about 3.5%. And right here it was at about 3.5%. And look what happened. It went straight up all the way up to 5%. So why did it go? So this went up. That's because the share price went down. That is not what we're looking for with our strategy in Robinhood, right? We're looking for the share price to go up. So I think right now that Realty Income Corp is fairly overpriced. I don't think it's a good time to buy for to put it in your Robinhood account and ride the wave up. I'll go ahead and show you guys another indicator that I use. It's worked for me so far. I don't know why it's worked, but it has, and I've just noticed that it works almost every time. So this is called a rune. You can just go to the summary page and then you go to the advanced graph and you can add an indicator right here and you just search a rune. And it has these two, the red and the blue lines, right? So when the blue line drops and the red line spikes on Seeking Alpha, that is my buy signal, right? So right here I would have bought it if I would have bought it when the red line spiked and the blue line dropped. And I would have rode this wave all the way up, would have dropped a little bit, and right here is when I would have sold it. So I would have gained about $1, just from buying it here and selling it here. This will work on any time period. Let's show the 1 year graph. So again, let me find a good signal for you guys. Right here, I would have bought right here, and I would have sold right up here. Do you see that? That's still a solid $2 gain per share. This happens again and again and again. And I only make sure that you only buy signals like these, right? Signals like these. Okay, that's your sell sign right there, right? When the red drops, when the red spikes up to the top, that's your buy. So you would have bought it down here and you would have sold it up here. Yeah, that's only $1, but you didn't lose anything. And you sold it right before it dropped. It works every time. Let's look at this one. This is a really good one right here. The red spikes, the blue drops. You would have bought it. You would have rode this wave all the way up right here. You would have sold it. You would have gained $5 a share. That it works every time. All you got to do is look at the Arun, and right now, look at it. Look at the Arun. So right now, I would have, if it was right here, I would tell you to buy it. If we were right around here, right here, I would have told you to buy it. All you got to do is look for when these two lines cross. It's that simple. Right now, we're riding the wave up. I don't know when they're going to cross again and when it's going to give you a sell sign. So right now, I would be hesitant to buy Realty Income. I'd be very hesitant to buy it based on the dividend yield graph and based on the indicator. I would not buy it. I would recommend to not buy it. The third step I always do is I always look at the company Make sure that there's nothing intrinsically wrong with it, that it's not, going under for some management reason. And everything about Realty Income is just a great company. Their slogan is the monthly dividend company. They pay monthly dividends. They have a huge diverse portfolio. They have a 98% occupancy rate, 49 different industries. It's a great company. I don't think there's anything intrinsically wrong with it, but I just think it's a little overpriced right now, and you can definitely get a better deal. I would just wait to buy on this one. So that's all I have for this video. I'll be back with another video in a couple days, and see you guys then. Take care.